In this video, I'll be breaking down this GBPCAD trade that I took. I'll show you exactly what I saw before entering, the structure behind it, and how the setup played out perfectly. Now let's dive in. First of all, let me clear the chart so that you can start afresh in doing the analysis. So I delete everything. Now, the first thing I have to do is to mark out my structure, like I used to say. And we have two types of structure. I have my external and I have my internal. So I mark my external from the 2-hour time frame and my internal from the 15 minutes time frame. So the external is showing me the general direction of the market, while the internal is showing me the current market trend, the current direction of the market, and that time frame is where I used to enter from. So it's very simple. Let's head over to the 2-hour time frame to mark out my external first before heading towards the 15 minutes time frame to mark out my internal. Now, this is my 2-hour time frame. I know I told you I usually do consider the most recent break of structure. That is the only structure that I do consider in this my setup. Now, I have a break of structure right here in my 2-hour time frame. This is my external, and here I have my swing high of my external, and I have my swing low. So as you can see here, the market is currently in a downtrend in my external. That is, the general market trend is downtrend. Now, what again do I need to mark out for here in my external? I need to check where the market is currently at in my external, whether it is in premium zone or in the discount zone. So I use my Fibonacci tool right here and place it in my swing high, then drag it down to my swing low. So currently the market has touched from here. The market has tapped into my premium zone from here before going down. So that is it. So the market has touched into my premium zone. I'll be looking out for sales. Because we are in a downtrend. That's it. So I'm done checking what I want to check in my external. Now let's head over to the internal to mark out our internal and look for entry there. So right here, I switch over to my 15 minutes time frame. So this is my 15 minutes time frame right here. And like I said, in my external, I used to consider the most recent break of structure. While in my internal, I used to consider the two of the most recent break of structure, the first and the second one. So the first one I have here is this. This is the first break of structure. And the second one I have here is this. These are the two most relevant break of structures I need in my internal. So if this particular swing high is broken, this is where I'll mark my change of character right here. So here should be my change of character. Then what if this one is broken? This particular second break of structure is broken. What if this second one is broken? Then it will be my market structure shift, MSS. You know, some people say that change of character and market structure shift, they are the same thing. But for me, they are not the same thing. I use change of character for the first break in my internal. Mind you, in my internal, for my external, I don't have anything like this. Once market breaks the first break of structure swing, that means you have gotten a change of character or a market structure shift. But in my internal, I have my change of character and I have my market structure shift. Here, the difference is that, okay, now let's head over to ChatGPT to tell us the difference between change of character and MSS. Let us know if there is any difference between both of them. So right here, I have my ChatGPT. So I'll ask, what's the difference? What's the difference between change of character and MSS? In summary, so here say change of character and MSS market structure shift are related, but they are not exactly the same. So change of character is equal to the first warning sign that the current trend may be ending. The first warning sign that the current trend may be ending. Let's forget about the example. Then MSS is equals to a stronger confirmation of trend shift. So that is how I use both of them. This one is the first warning sign that will give me a clue that the market is about to change the trend, while this one, when the second swing high here, when the second swing high is broken, then I'm very sure that the market has changed character, or that the market has shifted structure from one trend to another. So that's it. Now, that's all for my structure. I used to say that if you know how to mark out your structure, you've solved 60 to 65% of your problem. So we are done with our structure. Now the second part is our entry. Like I said, I enter with key level. What am I looking out for? I'm looking out for something like this here. Let me take, for instance, this is a zone. This is a supply zone. So this is a supply zone. Then what will I be looking out for? I'll be looking out for markets to come back to this zone. Come here, come down here, go up and break structure, then come down. Then once it comes down, I will now look for a key level. I've explained key level in my previous video. Then this is where I'll mark out my key level. Key level is when two candles have the same length, something like this. Something like this. So this is a key level. Then this is a key level. These two candles that have the same length. Then when it breaks with a body, I will now enter for a sell right here. So this is typically what I'm looking out for as a key level. But first of all, this formation will form first. This particular formation will form first before I will now look for a key level. So once I see the key level right here, I will now mark it out, then set my pending order right here, set my stop loss above, and target 1:2 depending on the structure. So this is basically what I'm looking out for in this. This is my entry model. I don't have any other entry model. I use only this type of entry model. Now the next thing in our chart is to mark out my zone. So first of all, let me mark out my zone from here. I mark my zone with the right candle right here. Then let me play the price to see if the market can come to my zone, and let's see how it will react from the zone. So I play the price, then boom, the market has tapped into the zone. Have you seen it? And as it tapped into the zone, it has created a break of structure already. So here is the break of structure that you are looking out for here. The first thing you are looking out for when price taps in the zone. Then the next thing I'm looking out for is for market to come down here and break this swing low. So once market breaks this swing low, I will now enter with this key level right here. So that is what I'm waiting on. Let me play the price and see what happens. Boom, the market has broken this. So this is my key level right here. Then I put my sell order here, pending order right here. Then I target, my stop loss should be slightly above here. Then I target 1:2 depending on the structure. So that is it. So let me play the price so that you can see what happens. So boom, have you seen the market tapped into the zone immediately and went down immediately? Tapped into my entry and went down immediately. So as you can see now, the market is going down. Let's see how it goes. Boom, take profit hit. So that's how I take my trades. It's very simple. I use only one strategy. the same type of structure. So that's how I took this trade. If you want me to teach, or if you want me to talk about the whole of my strategy, because there are some intricate parts of it, the do's and don'ts in my entry model, just comment strategy. Then in the next couple of videos, I will do a proper video about my strategy. Thank you for watching.